Hello, everyone. Welcome to, I think this is video 10 for chapter 4. We've been spending some time talking about a number of credits. All the credits we've talked about so far are non-refundable. I'd like to finish up our discussion of non-refundable credits in this video. So here we go. We've talked about a number of credits that can often be transferred from a spouse. So tax credits that can be transferred from spouse, we have the basic personal amount that comes through as a spousal credit. Um, the other credits that come through are the age amount, pension, disability credit can be transferred, and up to $5,000 of tuition amounts paid. The maximum transfer amount determines the total credit base for all the tax credits. We'll subtract the spouse's taxable income. So we'll add all of these credits together, and then we subtract how much of these credits the spouse is using. Reduce the subtotal by tax credit bases for basic personal, candidate employment, CPP, EI, tuition tax credit. All they're saying is we're going to tally up the spouse's credits. We're going to subtract any amount of their income that's using those credits. But from that total, those used credits, we can sort of apply our other non-refundable tax credits to try and save as much as we can for the transfer. So the exercise associated with that is Martin Levy is 68 years old and has a net income of $50,000. Of this total, $24,000 was from a life annuity he purchased with funds in his RSP. Life annuities from RSP count as pension income. His spouse is 66 years old and blind. So Martin Levy's 68, so he's going to be getting the old age credit. His spouse is over 65, so they're also getting the old age credit. And because they are blind, they are likely also getting a disability credit. She has no income of her own, is ineligible for old age security, and was attending university on a full-time basis for 4 months, paying tuition fees of $2,200. What are Mr. Levy's maximum tax credits for 2025, ignoring splitting pension income? So we just want to focus on the credits themselves. Well, we have a few things going on. So Mr. Levy has $50,000 of income. So he'll be using up his basic personal amount. $24,000 comes from a life annuity, so he collects pension, which means he also gets the pension amount. He's over the age, he's 65 or older, so he's getting the age amount as well. So we got 16, his basic personal, old age, the old age amount, and the pension amount. Now, he has a spouse who's not using their credits, and they also have an infirmity. They are blind, so we could get the caregiver. But when you are transferring the spousal amount, you do not get the caregiver. You don't get both. But our spousal transfer will have a little bump, this 2,687. That is the basic caregiver amount. So recognizing that we can't transfer the total caregiver credits, our spousal amount will get a little, call it a bonus, to account for those caregiver credits, or at least a portion of it. So the spousal amount will be the 16,129 plus that extra caregiver portion, so 18,816. The spousal amount comes from the spouse. It's their basic personal amount, but it's not considered to be a transfer. Basically, the spousal amount is its own credit that's based on the unused BPA. I consider it just a transfer amount, just to keep it simple, but technically it's not for the purpose of this exercise. So what are we transferring? Well, we can transfer the spouse's age credit they're not using, which the age credit is 9,028. Sorry, what's his name? Martin Levy, Mr. Levy. Mr. Levy's age amount is not the full 9,028 because his income is over that $45,000 threshold. So it's been ground down a little bit. So his age amount was 8,356, but he gets the full age amount from his spouse. The disability tax credit is 10,138. He gets the full amount because the spouse has no income. And we can transfer up to $5,000 of tuition, of which 2,200 was actually paid. So Mr. Levy gets all of these credits related to himself, his income, and his spouse transfers. In total, he has a credit base of 66,667. At a 15% credit rate, he will save a clean $10,000 from his taxes. So his total tax credit is $10,000. His credit base is 66,667 from adding up all of these various credit sources. Okay. Other than the spousal transfers, we also have political contributions. Now, political contributions are similar to donations. They're like donations, but specifically for political parties to aid them in elections. Canada elections limits contributions to individuals only. Corporations, unions, associations, they can't contribute. The point being is, in order to keep elections fair, individuals can contribute to their preferred candidate or political party to help aid their campaign to advertise themselves for election. But they don't want one wealthy individual or a wealthy corporation to just load up the campaign resources of one candidate. So they limit the contributions to only individuals, and individuals can't contribute more than 1,750. Now, this is the maximum contribution a person can make. The credit that's available to them is maxed out once they've paid 1,275. So you can pay more money, but that last $500, just short of $500, you just don't get any credit for. But up to 1,275, you actually get a very good credit rate. But we'll get there. These contributions can be made to a registered party. They can be made directly to the candidates of that registered party, or you can provide it to an independent candidate. So I can provide support to a political party. Maybe I'm not concerned with the political party, but I like a specific candidate. I can contribute directly to their campaign. Or maybe there's a candidate that's not associated with a political party. I can still contribute to their campaign. As long as the contribution is aiding towards a Canadian election, it counts as a political contribution. Now, this contribution limit increases $25 every year. So we want to make a political contribution. How much do we get back from credits? They're very high rates because the government wants to encourage people to contribute to their political parties. They want residents to be involved in voting. So the first contribution up to $400, the credit rate is 75%, 3/4. So if I contribute $400, I will get back from taxes $300. So I paid them $400, but I'm only out $100 after my tax return. So that's a very good credit rate. After the first $400, the next $350 gets a credit rate of 50%. So the max credit is $175 for that second range. After 350, the next $525, the credit rate is a third or 33%. That just happens to be the highest tax rate in our highest tax bracket. So even at its lowest credit rate, it's matching our highest federal tax rate. So these tax credits are very high in relation to income or in relation to other tax rates. So our total contributions, if we max out all of the available credit space, we will have contributed $1,275. That's our political contributions. And the tax credit we will have received back is $650. So if we max out our contributions, we'll get back about half of it in our taxes. So that's a pretty good deal. There is a question associated with that. 37. Yes. So Miss Unger contributes $785 to a registered federal political party. Determine the amount of her federal political contributions tax credit. So we're going to move through those ranges and see what our tax credit ends up being. So for the first $400 we paid, we get back $300. For the next $350, we get back $175. So we've so 400 plus that next range of 350, that's $750 of our contribution. And we know we got back $475 in credit. Because we maxed those ranges, we get the max credit for those ranges. But our benefit or our contribution was $785. So of the 750 we've already accounted for, how much does our last $35 get? Well, if we multiply that by 0.333%, it comes out to $11.67. For simplicity, we'll round that off to 12 bucks. So we got $300 for the, let me see if I can make this a different size and get it to fit. So for our first $400, we got back 300. For our next 350, we got back 175. And for the next $35 we spent, we got back about $12. So by contributing $785, we got a tax credit of $487. So we got back some of that money in our taxes. Hopefully having this spreadsheet helps make it more clear. So our max contributions is $1,275. Our total contributions was $785. So we're well below our maximum. So we will move through our contribution. First 400, then the 375. So let's say if our contribution was only $400, we don't have anything in those next ranges. We just maxed out the first one. For the next 750, we maxed out the first one and the second range. So we get back $475 through those two ranges. But we spent $785, so we go $35 into that last category, that last range at 33%. So you can feel free to play around with this spreadsheet. If I contributed $250, I'll get back $188 on the tax credit. Okay. Labor-sponsored funds, form of mutual fund corporation. This is for contributing to labor bodies. I don't think I want to complicate this topic. It's in the slides, it's in the textbook. I don't think we form any questions around it. I don't really want to get into explaining what a labor-sponsored fund is. So I'm just going to move on to the other tax credits. So far we have talked about non-refundable tax credits. There's a handful of other tax credits. There's the dividend tax credit, which we will talk about when we get to the end of this course in Chapter 7. Foreign tax credits we touch on as well in Chapter 7, and we revisit in Chapter 11. Investment tax credits we cover in Chapter 14. So there are additional tax credits that are important, but for the purpose of this chapter, I think we've covered all of the non-refundable that we're going to. When we come back in the next video, we will discuss refundable credits. So for non-refundable credits, if those credits reduce our tax payable, once our tax payable gets to zero, any non-refundable credits we have left are just sort of lost, unless they can be carried forward like donations. For refundable credits, they will reduce our tax payable, and if we can get a refundable credit, or once we're at zero, if we have refundable credits left over, they will add to a refund. So they don't stop at zero. We will get that money back one way or the other. So I will talk about that more in the next video. Thank you for your time. See you in the next one.